for me, big one for me is going to be the Nokia. That's been on my radar for a while. In fact, their earnings came out on the 29th. And nothing but positive news, really. They're based out of Finland, right? And they are really going to be going solvent. Oh boy, teammate down. They're on a trajectory to be solvent here, hopefully pretty soon. So net sales have rose 3% year over year on their quarterly earning report. Growth fueled by the 5G. They're investing heavily in the 5G and specifically in areas that make sense. So this blue ocean strategy, as opposed to competing with AT&T and the big wigs, right? They're going to all these other places that might not have the technology installed or integrated yet into their communities. So there's been a big play on that, and it's predominantly the network infrastructure and mobile network businesses in particular. So they're really, I own quite a bit of Nokia at this point, and it was not because of the Wall Street bets buzz. That was part of it, but then I started looking into it and realized I think there might be an opportunity here. So definitely Nokia is one that I've been looking at. They've been comparable net profit increased more than 11-fold. I mean, that's $455 million if you break that into numbers.
Yep.
And they blew the investors away. The analysts were expecting estimates of well below that, in fact, negative. So it's pretty interesting as they're coming back. Gross margin rose 2.6 percentage points to 37.9, 38% at this point. So they're up.
Off what I was just talking about,
And I
like
think they're
what's
going to continue
overvalued and
going.
what's not overvalued. Like when you look at Nokia, like they're actually a stock that's not overvalued, that's seeing some good growth, specifically in their 5G. And so like when you look at their market cap, their revenue is almost the same as their market cap. So that's basically,
right.
I guess that's what they're saying. Like if you look at a like Facebook or something, like their market cap might be 10, 20, 30 times their yearly revenue. But with Nokia, their market cap is basically the same as their yearly revenue, which if you're comparing that to other tech companies, they're quite undervalued currently where they're at. And that's why I think they went up 10% off their earnings. Like Nokia is so big of a company, they should never be moving off 10% off their earnings, but I think people are realizing that they're undervalued.
Right.